Welcome to the world of UK taxes. In this video, we'll provide a detailed explanation of the Statutory Residence Test to help you determine your residency status for income tax and capital gains tax. These rules are complex, so stay focused and watch until the end. There's a wealth of valuable information that will help you understand your tax obligations and maximize your benefits. Why does it matter if you're a UK resident for tax? As a general rule, taxpayers who are resident in the UK in a tax year are taxable on their worldwide income and capital gains arising in that year, and taxpayers who are not resident in the UK in a tax year are only taxable on their UK income arising in that year. Subject to certain exceptions, non-residents do not pay capital gains tax. It is therefore important that a taxpayer's residence status is correctly determined. The UK has had a statutory residence test which applies to determine a taxpayer's residence status for income tax and capital gains tax. The statutory residence test has 3 steps. First, the automatic overseas tests. If an automatic overseas tests are met, the individual is non-resident for the tax year and there's no need to go any further. Under automatic overseas test, an individual is not resident in the UK for a tax year if they meet any of the following 3 tests. 1. They were UK resident in one or more of the previous 3 tax years and they are present in the UK for fewer than 16 days in the current tax year. 2. They were not resident in the UK in all of the previous 3 tax years and they are present in the UK for fewer than 46 days in the current tax year. 3. They meet the work abroad condition, that is, they work full-time overseas for the tax year. They have no significant breaks from the overseas work. They spend fewer than 91 days in the UK in the tax year, and they have fewer than 31 workdays in the UK in the tax year. If the automatic overseas tests are not satisfied, then we will apply Step 2, which is the automatic UK test to determine whether an individual qualifies as a UK resident for income tax and capital gains purposes. Under the automatic UK tests, an individual is resident in the UK for the tax year if they meet any of the following 3 tests. 1. They are present in the UK for 183 days or more in a tax year. 2. They have a UK home. 3. They work full-time in the UK. If an individual is not a tax resident under the automatic overseas tests and the automatic UK tests, we will then consider Step 3, which is the sufficient ties test. The sufficient ties test is more complex and requires careful attention to understand. Some individuals will not meet any of the automatic overseas or automatic UK tests. Their resident status will be determined by the sufficient ties test. This step considers both the number of days spent in the UK and the extent of the individual's connections or ties with the UK. There are 5 possible ties. The first tie is created by having the family in the UK. The second tie is created by having accommodation in the UK. The third tie is established if the individual has worked in the UK for at least 40 days in the tax year. The fourth tie is established if the individual spent more than 90 days in the UK in either or both of the previous 2 tax years. The fifth tie is established if the UK is the country where the individual is present at midnight for the greatest number of days in the tax year. For individuals who have been resident in the UK in one or more of the previous 3 tax years, the following rules apply regarding days spent in the UK. If they spend 16 to 45 days, they need at least 4 ties. If they spend 46 to 90 days, they need at least 3 ties. If they spend 91 to 120 days, they need at least 2 ties. If they spend over 120 days, they need at least 1 tie. Meeting these requirements will establish them as UK residents. For individuals who have not been resident in the UK in any of the previous 3 tax years, the following rules apply regarding days spent in the UK. If they spend 46 to 90 days, they need all 4 ties. If they spend 91 to 120 days, they need at least 3 ties. If they spend over 120 days, they need at least 2 ties. Meeting these requirements will establish them as UK residents. To simplify this further, at the end of this video, I've included Table A, which outlines the number of days and ties for leavers who were previously resident in the UK, and Table B, which illustrates the number of days and ties for arrivers who were not previously resident in the UK. If you're a UK resident, you may be liable to pay income tax and capital gains tax on your profits, even if they come from foreign earnings and gains. This means that your global income and gains are taken into account. I will be creating a separate video on the remittance basis, which is relevant to this topic. Generally, an individual who is resident but not domiciled in the UK can choose to tax foreign income and gains on a remittance basis. But if you're non-resident, your foreign income and gain is not subject to UK tax. This can be a significant advantage, especially for high-value transactions. The statutory residence tests determine your residency status in the UK for income tax and capital gains, and consequently, your tax responsibilities. Understanding these rules is essential for managing your finances effectively and avoiding unexpected tax bills. I've also included illustrations in the following slides to provide more detailed insights on the topic. Don't forget to subscribe to my channel for more helpful videos on UK taxation.